So far, the stock market has been quite good. It has been the gift that keeps on giving. We're up 26% so far this year, and the year isn't even over yet. However, in 2025, there are a lot of question marks that we do need to be aware of, and it could impact your portfolio. But here's the thing. We don't know what's going on, right? So what are some stocks that we should consider that can play the middle, that could do well based on whatever scenario happens? I think the answer right now is going to depend on dividend stocks. So the question is, what are the best dividend stocks for 2025? I think I have the answer for you. Let's go ahead and break it down. Now, I'm going to give you a little bit of background here, and it's extremely important. I know some people don't like the background, but again, I'm an educator, okay? I'm sorry for being an educator, I guess, but it's important to give you the background because, again, anytime that you're teaching about the stock market, but just anything, I want you to understand what you're doing, understand what I am doing, so that you know what you are doing, okay? So I'm going to explain how I came to this list and why I do my list just a bit differently, especially when it comes to dividends, and then we're going to get into the list, all right? And I'll try and remember to put the chapters there. If I don't, somebody remind me in the comments to put the chapters, and I'll put the chapters there, all right? So we can all be happy. All right, so if you don't know or you're new to my dividend list, here's number one. The way that I do these is I don't just pick stocks that have super high dividends. And the reason why is because you can fall into what's called the dividend trap. Basically, dividend trap is a crappy stock, a stock that continues to lose money, but pays out 13% in dividends. That's not great, okay? Because you are losing money, but it's going to pay you back $1, even though it lost 75%. That math doesn't really add up. I did a whole video on how the dividend trap works and why it is very dangerous. Now, if you were just to Google this, you can see that a good dividend, depending on who you ask, is generally around 2 to about 6%. So every dividend stock that we're going to cover today is going to be around that 3 to 4% range. But here's what makes this list special and definitely what makes this list different. I wanted to choose stocks that were doing well, meaning they have momentum, plus they pay solid dividends. And the reason why I wanted to take that lens is because A, they're beating the stock market right now. So if the market continues to do well in 2025, which is what I am hoping for, so on my Christmas list, the market continues to do well, then these stocks should continue to do well. So if the market's up 26% and some of these stocks are up 30 or 40%, great. We're going to make 20 or 30% hopefully on some of these stocks. And I get a 3% dividend or 4% dividend or whatever. Good. I get that on top of it, right? If not, what does happen sometimes, if the market is shaky, if the market starts to fall, and we saw this in 2022, and we see this when the market does get choppy, some investors move towards dividend stocks, and you will be in the right position. And you may get a solid income from these dividend stocks depending on how much money you make. So you're kind of playing both sides of the board. You're getting a stock that is making money now, and then if things don't play out, then you're getting a stock that is going to pay a solid income if things get choppy. So you're in the right place. You're getting paid now, and then you could get paid in the future as well. So you're going to be in a solid position in either case. Got it? That is how we came to this list. There's one very, very special and interesting stock on here as well that really raised an eyebrow. Now, let's go ahead and get into it. The first one is Citizen Financial Group. CFG is the stock symbol there. This is a stock I think I've sprinkled into. We've talked about financial stocks. I've mentioned it many times before. I did a video about the best sectors to invest in. I talked about regional banks. This is one of those regional banks. The stock is up 25% in the last 6 months, up 31% in the last year. Again, told y'all, momentum, a stock that's up 31% in a year. That is pretty solid. Their dividend yield at this time is 3.86%. Again, very, very solid. They're not the only bank that's in this sector. If you want to go bigger, and I'm not a fan of Wells Fargo, so I'm not going to go into why I'm not a fan of Wells Fargo. I think if you've been a fan of this channel long enough, you know why. But JP Morgan is on the list. Maybe a Bank of America is on the list. I'm not really sure. But I know JP Morgan was doing well. I know Wells Fargo stock wise was doing well. But there are plenty of financial stocks that are doing well that do pay a solid dividend. So that's not the only one. if Citizen Financial is not your cup of tea. Now, IBM is an interesting company. They're up 28% in the last 6 months, up 36% over the last year, paying just 3.01% in dividends. They just barely made the cut. And they are in the tech space. IBM is one of those old, slow-moving, I like to, in my mind, I'm thinking like submarine battleship. I don't know why. Maybe because they call themselves like the Big Blue or whatever they call it. I think they did a microchip that dealt with a submarine or something. I don't know. The main thing is IBM is a little bit more volatile when you really look at a chart, and you'll see like, oh, this is a little more, it's not as slow and steady as you would think an old tech company would be. But if you go back and compare it to a company like Microsoft that was actually negative in the last 6 months or so, IBM is actually a better pick right now compared to what Microsoft is. Now, who do I trust over the next 5 to 10 years to make more money? I'm probably going to go with Microsoft, and that's maybe just confirmation bias. I've also owned Microsoft much longer, but at least for the next 6 months, maybe even for the next year, IBM is showing that they may be a bit better, and I'm pretty sure if I were to compare dividends, I'm pretty sure that IBM would win that category as well. But IBM might be one of the best places to put a bit of your money, or at least some of your attention, for your watch list for 2025. Next here is Kinder Morgan. That is KMI. They are in the pipeline petroleum space, energy company. I be telling y'all, these billionaires have moved a lot of their money into energy. Did a whole video about it months and months ago. Some of y'all listened, some of y'all didn't. I be telling y'all, 38% in the last 6 months, up 53% over the last year. They pay 4.38% in dividends. That's solid. That is very, very solid. And again, a 53% gain in the last year, while also paying, keyword, while also paying more than 4%, more than 4.5% in dividends. That's a very rare find to get both of those. You can find a lot of stocks paying 5%, but only making you 2%, right? So 2% in gains. You are getting both here. Solid dividends, very, very good gains. And again, energy stocks are doing very well, not just oil and gas and pipelines and things like that. There are a few utility stocks that are doing good too. So there's a whole bargain bin of very good stocks. Some that are also under $150 too still. Not too many under $150 at this point, but we do have videos on those, so you may want to check those out too. Kinder Morgan, KMI. Next here is BK. This is one of the Bank of New York companies. There are a lot of Bank of New York companies. But the stock is up 30. The stock symbol is BK. Bank of New York Mellon is the technical. I say technical. That's the name of the company. But up 32% in the last 6 months, up 51% over last year. Another financial company. Oh, look at that. And it's probably the lowest dividend yield here at 2.29%. One quick thing that I didn't mention, that I meant to say earlier, is that for me, just so you know, I should have put this in the intro. When I start to look for stocks, I do not go and search for things in specific areas. What I do when I search, I will usually use a filter, and I'll search for specific criteria. I want a stock that is beating the S&P 500. I want a stock that pays a dividend of 2%, between 2 and 6%, or above 2%, and I'll sort them out and draw a line at the top 10, right? And then pick those, and then make sure all of those are good, and grab whatever is good, right? And if they just all happen to be in energy, or they all happen to be in finance, then it is what it is. So I don't go and purposely choose things in certain areas. That is literally what that line is at the top 5, or what was good in the top 5. There are some companies that will have a spike because of earnings, and that's the only reason why they were up 100%. And I don't think that's quality, right? That was one good day. So just so y'all know, background on how we do this, I actually did a video, and I remember it was only last year, on how we do this. So a little background information, just so you know. All right, continuing to the most interesting stock here. I was a hater of this stock. And things are changing, perhaps. It's AT&T. The stock symbol is just T. Now, they're up 23% in the last 6 months, up 31% over the last year. I think we all know what AT&T does. They're up 4.38% over last year. Now, there are some people who still do not like AT&T, and that is totally fine. I was a hater of AT&T because for what felt like decades, and for at least maybe a period of 5 years, the stock had not made money. They were paying a good dividend, but not making money. And they were a prime example, a very good prime example, if you will, of the dividend trap. Well, now things have finally changed. However, things have really changed because for the first time, at least in my memory, we now have insider buying to a massive degree. By massive, I mean you have a 2-to-1 ratio of insider buyers, both for the last 12 months and the last 3 months. What this means is that the CEO, people who are on the board of directors, there are more buyers than sellers. So we're talking like 16 to 8, 14 to 7. You have double the buyers than you have sellers. Now, you don't really know why someone would sell a stock. I've said this before, but you only know why someone would buy a stock. And these are the people who work there. They run the company. Why else would you buy a stock of your own company? Why would you buy more shares of your own company? For what other reason? Other than you think that the prospects are good. You can sell it for tax reasons. You can sell it because you're paying for your kids' college. You can sell it for a lot of reasons, right? We don't always know, which is why when somebody sells, I don't really talk too much about it unless it's Warren Buffett because he's known for not selling. But when I start to see a lot of insiders start to buy their own stock, it does mean something. And there was a study in the 90s from Harvard that showed that when we started to see insiders buy, they actually do beat the stock market, the S&P 500, by a large margin within that year. This could be that time. This could be that time from December of 2024, from December of 2025. I'm interested to track and see that if AT&T continues to beat the stock market over the next year. They are on to something, at least we think. We'll see what that something is, but that is something that's definitely raising my eyebrows. I have not, and you could go back and watch my videos from years and years and years ago, I've not ever been a fan of AT&T. But again, this is the first time I've started to see insiders starting to buy this company. They have some background and some weight, some acquisitions and stuff. So I would need to look into the books, see what their debt looks like, and really dig more into it because I'm a little shaky on it. But the momentum is up, the dividend is good, but I'm a little skittish. So I want to see why they are buying. If I can find out, I wish I could just call somebody and see. That's not the case. Your boy don't have that type of sway. But this is one that I want to really, really understand what is really going on here. In terms of stocks I like the most, IBM definitely has my eye. Kinder Morgan has my eye. BK, that's probably going to be one I'm definitely pulling the trigger on because this is the time of year where I want to reevaluate my own portfolio. I'm probably going to start to make some moves by the end of the week. If you want more information on how you can become a better investor, as well as other stocks you might want to check out, you want to check out these videos here.